Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing certain details about how to provide an interest on capital and interest on drawing which is supposed to be charged. Let's understand with certain basic examples on it. So when we speak about interest on capital and interest on drawing, let us first discuss about what capital is and what drawing is. So capital basically is the amount that is invested by a partner out of his own pocket into this business. That is the amount of capital. Rather, we term it as capital itself. Drawing is something that means from that capital that he has invested, he has taken out certain amount of money that is known as drawing. So when we talk about drawing, we basically understand that that is the withdrawal of the same capital that he has invested. Now that the capital has been invested in the business, that is the business capital that he has withdrawn from it, and hence on one part we have to provide him interest on the capital money that he has invested, and on the other part for any drawings that he does in the term of the business or during his business phase, he's supposed to pay interest on it. So on one scenario you have capital interest being paid up to the partner. On the other hand, you have interest on drawings charged to the partner. So once where capital interest is provided, you give out from the business point of view to the capital holder or the partner. On the other hand, for any drawings done, he has to pay up interest to the business. So it's a give and take relationship basically. Business gives interest on capital to the partner pays up interest on drawing to the business. So this is how it is dealt with. Now there are certain ratios that we have to deal with. So interest on drawing is basically 6% of ratio, or rather 6% of interest that he has to pay up to the business. Interest on capital is basically 5% of interest that a business pays up to the capital partner holder. So this ratio is supposed to be followed. It can be at the discretion of the company as well. However, this is the basic regular flow that we have to follow. We'll draw an example here which will give you certain understanding about how a capital interest is paid. It is a formal mathematical calculation that you have to do. That means 5% interest on certain X amount for the period of time that he has been or he has invested that capital into the business. So let's figure out with two examples here. One will be on interest on capital, second will be on interest on drawings. Let's go with the interest on capital first. So I've mentioned the sum here, that is interest on capital. We'll highlight each and every line with red highlighter so to understand what all important details are supposed to be covered. As you can see, we have highlighted one single line which says Mr. A has invested a capital amount of rupees 10,000 as capital in Messrs. ABZ Private Limited. So there is one company, one firm which is known as Messrs. ABZ Private Limited, where Mr. A as a partner has invested rupees 10,000 in this. Mr. A has invested this amount for a period of 2 years as he has mentioned here, and post which he wishes to take out the whole amount as a drawing. Now what we need to figure out that what is the amount of interest that business will pay to him for 2 years if the rate of interest is 5%. This is what we have to figure out. So it is a simple calculation, as there is no period, or rather we can say that period of joining has been mentioned here. Hence, what we'll be doing here is that we'll be calculating it for 2 basic years on the rate of 5% itself. So let's figure out what is the interest rate that will be there, and what is the amount that will be provided, and what is the final amount including the capital plus rate of interest which has been provided to this specific person known as Mr. A. So as you can see, we have done the working here. Interest on capital has been mentioned. Now 5% on 10,000 is the capital amount that he has done, so 500 per year basically. So for 2 years he'll be taking an interest of amount of rupees 1,000. So Mr. A, when he takes out that amount after 2 years, it will be that he has already received an amount of 1,000 as interest on capital, and the 10,000 that he wishes to take off, so 10,000 what was invested into a company has been taken off as 11,000. So that is the interest on capital that he has been provided. Let's go on to the next scenario where we'll understand if in the same situation Mr. A has withdrawn certain amount from that 10,000 capital, what is the interest that he is supposed to pay, and what is the interest on capital that he'll receive after 2 years on this. So let's assume a situation whereby Mr. A has withdrawn the same amount of rupees 10,000, but at the end of the first year he has taken 8,000 rupees as a drawing from that amount, and rest 2,000 is still there in the capital itself. So what is the amount that he'll receive as interest on capital and what is the amount he'll receive as interest on drawing will be understood here. Let's figure that out. So as you can see, we have mentioned the same scenario here. It has said that if in the same situation Mr. A has a specific amount of capital invested in the business already, which is for an amount of 10,000. What if he withdraws 8,000 out of it in the end of the first year? At the end of the first year, he withdraws 8,000 out of it and the balance capital of 2,000 is still there. So if you have to provide interest on drawing, or rather you have to charge him interest on drawing at the rate of 6%, what would the amount be? And what is the amount that he'll receive as a capital bonus, or rather we can say interest on capital on the total amount that he has still kept in the business? So that's what we have to calculate. Let's figure it out. So if you can figure out, we have mentioned the interest on drawing and interest on capital part as well. Interest on drawing is at the rate of 6% that we have decided. So 480 is the amount, because 8,000 is the amount of drawing here, and the balance 2,000 that is left, that is interest on capital at the rate of 5% will be done, which is rupees 100. So accordingly, interest on drawing has been calculated, interest on capital has been done. So the interest that he has to provide, that means a business has to provide to one specific partner, is rupees 100 itself, which is less. However, the amount that he is supposed to receive as an interest on drawing is 480 rupees. So that's what the calculation refers to. This was just a basic calculation for your understanding. However, the complexity of this kind of calculation will increase when you go ahead with the problems in near future. So I hope this video gave you a clarity about what is the rate of interest, what is the kind of capital interest that you have to charge, and what is the amount and how the flow of interest works here in this kind of partnership account. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.